Hi, April. Thank
Hi,
you for being
Charles.
with us today.
Yeah, thank you. Thank you. Good afternoon, Charles. Good afternoon, everyone. And, thank you for allowing me to share my thoughts about the market for the second half of the year.
All right. Okay. So April. So in our last, just to update everyone who might have forgotten or who might have missed our last outlook. In our last market outlook 6 months ago, you actually already mentioned about the possibility or the likelihood that inflation and interest rates may have already peaked, and how this could be a positive, obviously, for the Philippine market. While it might have taken a little longer than expected, right? Rate cuts are now widely anticipated to happen in the next few months. In fact, when I was reviewing the advanced questions, a lot of the questions were already asking about the potential opportunities and potential impact of a rate cut, right? So for my first question, I want to ask, what are we seeing lately in the market or in the economy? And do you agree that rate cuts are indeed coming in the near future?
Yeah, I think so going back to how the market performed in the first half, I think initially we still talked about, looks like both inflation and interest rates have peaked. But then I think during the first half, both in the US and the Philippines, there were some concerns that that is not the case. Uh, for example, let's just stick to the Philippines, no? We had very high rise prices, and of course, I think affecting the global economy, we had oil prices going up, trending up in the first quarter. So that can explain the volatile performance in April. But I think after that initial scare, there are now signs that inflation is going down. I mean, for the Philippines, for example, we have the oil prices, I mean, have reversed. And then aside from that, El Nino is over, so that should help prices go down. And of course, the cut in the tariffs. And we earlier on talked also about the potential of a 100 peso minimum wage increase. And that seems to be off the table because wage prices have increased by much less in Manila at 30 plus peso per day. So looks like inflation is no longer an issue. And of course, I think importantly, we're talking about rate hikes, no? In the US, we saw the inflation rate, initially also after showing signs of stickiness, consistently going down. And the May and June numbers were very, very good because they were lower than expected from every and all angle. And then we saw Jerome Powell actually talking about inflation going down the way they expect it to be. So now they're shifting their focus to unemployment. So that means lower interest rates for them. And then the BSP governor on his part said, since it seems like inflation is no longer a problem and it seems like the Fed is going to be cutting rates. So we're also going to be cutting rates soon, like in August.
Interesting. So it seems like the trend that we're seeing is happening both here in the Philippines and in the US also. I want to ask one question, because a while ago, one of the concerns was actually the number two concern. The number one was geopolitical. The number two was actually inflation reaccelerating higher. So do you think finally, because maybe people are, for the last almost 2 years, the markets in general have been anticipating lower rates, but it seems like it has been stickier than usual. But this time going forward, do you think finally we're over that risk once and for all?
That inflation will reaccelerate?
Yes.
Yeah, I think, yeah, for the Philippines talaga, if you look at the breakdown, one of them is rice. I mean, it has always been rice, not only this round, but also say in 2018, 2016, it really is a rice issue. But then, I mean, aside from the fact that El Nino is over, I mean, of course, the disruption brought about by El Nino, it's bad for rice And India decided like, hey, we're not gonna export. That's actually one of the major catalysts. If you look at the rice prices, it started to shoot up in August. And what was the catalyst for that? It was India's decision to ban the export of rice. And India, being one of the major exporters of rice, had a major impact in global markets. And of course, we are so dependent on imported rice. But then again, now that the rainy season is here, you know, although the ban is still there, there are talks that the ban might be lifted because India might have excess supply. And then, of course, the tariffs will be reduced from 35% to 15%. So that is a huge reduction. So I mean, rice is very important for the Philippines. From That's around 10% of the consumer basket. Food being close to 40%. As for the other parts, okay, what about demand-driven inflation? Because that is the story after the pandemic. You know, demand has been very strong globally. That's why inflation is so high. You know, just looking at the different indicators like inflation, um, well, you can look at it in the slides afterwards. We're going to post it anyway. So if you look at the different commodity items that are part of the inflation, if demand is very strong, what will happen is businesses will have pricing power. So that's what the BSP is very worried about, the second round effects. And if you're going to look at the monthly inflation numbers, you will see that aside from food and maybe transportation and restaurants, there is no pricing power. There is no inflation anywhere else. It seems to imply that the consumers are, I don't know, yeah, like, you know, maybe 2022, if you increase your price, consumers are saying, you know, yeah, that's just how it is. Like, you want to go out, you want to have a good time. I mean, prices are high. So what? Then I really want to go out. So I'm going to spend money. But now when prices are high, they just say, well, I'm not gonna buy it anymore. So yan, may parang ano na yung consumers eh. They don't want to spend anymore. So that's one of the reasons why we're a little bit more confident that inflation is not gonna be a problem anymore, because the economy is showing signs of, I guess, you know, softening. You know, it's still expanding, but not as robustly as it did in 2022.
All right, I think that's clear. No, so no more additional second round effects that we're seeing now. So just to reiterate what April said a while ago, for those of you who you would like to look at April's slides and all the charts, no, don't worry, we'll still be sending out and it's still going to be available to you guys for you to review. But yeah, for now we're just focusing on the questions. All right, okay, April. So you mentioned a while ago that you briefly mentioned that the next step here is the cutting of rates, right? So the question is, how soon can the BSP, for example, cut rates? And just to add to that, though, because we also ask for advanced questions from our clients, and one question in particular I'd like to highlight, it's from Catherine, no? So will the BSP cut rates ahead of the US Fed? So again, it's asking about the timing of the rate cut. When can we see it? Do we have a specific date in mind? What do you think?
Yeah. I think in the August meeting, they may cut it. They already said that. You know, I think when they initially said that, the first time Governor Remolona said that they may cut in August, the market kind of panicked because the peso was weakening, right? Because the expectation was, or you know, it was still uncertain around May if the Fed would actually cut rates in September. Okay. But, you know, Governor Remolona was saying, you know, we're also looking at the Fed and, you know, we feel that they will cut in September. They didn't say it straight like that. But if you really read what he said, that was what he was implying, that they have a feeling that the Fed will actually start cutting rates in September and will cut rates twice. That's why they're also going to cut rates twice. So their thinking was, you know, like August, if we cut it, it's because we expect a September cut. So yeah, looks like the BSP right now kasi 'di ba, if you look at the CME probabilities of interest rate cuts for the Fed, I think there's almost a 100% probability that the Fed will cut in September. So with that, I think even if the BSP cuts rates in August, the peso will no longer weaken as a response. So, I mean, even right now, we're seeing the peso actually already, recover or strengthen versus, what was happening around May, June.
I see. So the if the rate cut is only like a month earlier, and as long as it's expected that the US would also follow very, very soon, then that's much less of an issue rather than just an outright cut in the Philippines without an equivalent in the US.
Yeah,
Right.
so that will preserve the interest rate differential. So I think the market will be fine with that.
So we're looking at August for the Philippines, and in the US it's September. Is that correct? So
Yes,
how
that is
about in
correct.
terms of the magnitude, like for the rest of the year? What are the expectations of the market or that you may have for the next 6 months?
I think for the Philippines, the consensus is 2 rate cuts, so 50 basis points. So in other words, they will just follow the lead of the Fed. The Fed is also expected to cut rates by a total of 50 basis points for this year. So probably this year we'll see a 50 basis point rate cut.
All right. Okay. So you already briefly mentioned a while ago about the peso, and we also have a lot of questions regarding that. One in particular from Maurice was asking, why is the peso depreciating recently? And what is your forecast, the peso dollar forecast for the next 6 to 12 months? For the next, let's just say for the next 6 months.
Okay, the peso, well, depreciated, yun na nga, because as we discussed earlier, because it seemed that if you listen to what the Fed was saying earlier this year, they were very hawkish. Remember during the start of the year when we had our market outlook, the market was anticipating a total of six to seven rate cuts. Okay, and then you saw inflation in the US being higher than expected, showing signs of stickiness, and then the Fed, trying to control market expectations by saying, we're not sure, we're not happy, we're sticking to our 3 rate cuts for the year, diba? So, Powell was really very hawkish, and in fact, sometime during the first quarter, there were, in fact, even some, the rising oil prices, and because of that, some economists were even saying, oh, the Fed might even be raising rates. I mean, you don't have a lot of them, but there were some that were talking about, higher, more rate hikes. So I think that was the catalyst. So because of that, maybe, from a very loose expectation of 6 rate cuts, then you reduce that to, 'di ba, parang I think at some point became one rate cut or
Yeah.
even zero.
Yeah.
Maybe that was around April. And then nung May, it became 2 rate cuts again. If you track the CME, the rate expectation. So that expectation that, maybe the PSP might cut interest rates. So the rate differential will become um, much smaller with the US. So of course, the dollar will be strong. But then, I'd like to say lang, it's not just a Philippine problem. Um, if you look at all regional currencies were weaker. Everybody was in US dollars because of expectations that the interest rates in the US would stay higher for longer.
I see. I see. So in other words, going forward, it seems like further depreciation in the peso in the regional currencies seems to be less likely than what
Yes.
we saw. Yeah.
Yeah,
Okay.
with
That's
the
great.
Fed expected to start cutting rates. I think that has been the catalyst for the strong US dollar the past 2 years. So at
Yeah.
least that will no longer be an issue.
All right. Okay. We have a live question actually from Zoom, no, from Efren. just to clarify, to help clarify this matter, no? Because rate cut typically would mean, so his question is, will the rate cut make the Philippine peso less attractive to foreign investors, leading to depreciation? So will this again, discourage foreign investments in the local stock market? So
Yeah, oo. Yeah, I guess yun na nga eh. Let's just clarify. If we cut interest rates, but the US will maintain high interest rates, then that's not
that's
good.
the problem. Yes,
Oo,
correct.
that's why when si Governor Remolona said that, oh, we're gonna cut rates in August, the peso weakened because investors were worried that, it wouldn't be as attractive to hold peso because if the difference between the US dollar interest rate and the peso was so small, edi mag US dollar ka na lang, di ba?
Yes. So as long as the gap, the gap is maintained, the buffer is maintained, then it shouldn't be an issue. Okay,
Yeah,
so
100
to
basis
clarify
points
that.
right now, di ba? 6.5 tayo and then the US is 5.5.
Yeah. Okay. Okay, thank you. Now, moving on now. So I guess this is the question that everybody's waiting for, right? So, okay, I think you agree there's going to be likely rate cuts, right? So, given market expectations of rate cuts coming very soon, is it finally time for investors and for our clients to be aggressively buying stocks?
Okay, I think that's the most important question, or that's the elephant in the room, right? So, tsaka especially, 'di ba, pag nag-aral tayo sa school, yan naman ang sinasabi, lower interest rates are good for stocks.
Yes,
And
exactly.
especially if you think about how the market has performed the past 2 years, um, the real obstacle would be the tight monetary policy or the rising interest rates of the Fed. And now that it's finally over, the logic would dictate that we should be celebrating. I think in the short term, I agree. The market should go up, and that is what we have been seeing the past since 2022, indications that inflation is easing, and the Fed hopes that the Fed might cut rates would lead to lower interest rates in secondary markets, stronger peso, weaker dollar, and then rallies in the stock market, risk assets, including Philippine stock market. So we've seen that several times the past few years. And this time around, we are seeing the same, greater confidence, in fact, that interest rates are finally on the way down. So we're in the secondary market, for example, we're seeing 10-year bond rates going down. In the Philippines, for example, from 7%, our 10-year bond rate is now down to 6.25, I think. And the peso, of course, after almost hitting 59, we're now at 58.2, I think. So, and then the market has rallied quite substantially, I think 9 to 10% already from the low, no, in a span of, I think 2 to 3 weeks lang. So the trend is there, rightfully so, because of that. So I think in the short term we may see that trend, but um, I think over the longer term, I mean not longer term, but over the next 6 months, I think the risk of volatility happening is still there, and there are many reasons for that.
Okay, so could you share like the reasons why? So you're saying that yes, short term it will be good as what we've seen the last 2 years. Every time you see inflation expectations going down, right? But there are risks. So could you discuss these risks?
Okay, yeah. I mean, first of all, I'd like to say that if you look at history for the Philippines at least, no, kasi we looked at past rate cutting cycles by the BSP, and it wasn't a straightforward relationship. If you look at how the PSEI performed 6 months, 12 months later, I think that happened in 2012, 2016, 2018, no? The BSP went through a rate cutting cycle. 2012 market went up significantly.
Yeah.
12 months
So
later.
sorry,
Yeah.
April. I think we can actually show that. So I think that's
Yeah, I
slide
think we have
30
a
of your presentation deck, right? So I think
yes,
we can
yes.
share that
Oh,
for the benefit of our audience. Yeah,
Yes.
but sorry,
So
so continue. So you were
yeah.
saying,
So you can see, for example, in 2012, when the BSP cut rates, the market was strong. So that's great. The problem is in 2016, first 6 months, it was even down, no? That was the time when President Duterte first came into power and President Trump first came into power. And when he came into power, of course, there was the US-China trade war. And then Duterte was saying, "Oh, we're gonna pivot to China, pivot out of the US, and we're gonna go after contractualization." So investors were kind of concerned about that. So that had a more significant impact, limiting the favorable impact of any rate cut, no? And then finally, of course, we know what happened in 2019 when the BSP started cutting rates. We had the COVID-19 pandemic in 2020. So of course that had a bigger impact. So in other words, rate cuts aren't automatically good for the market. I mean, the relationship is there, but if you look at the actual performance, it's not straightforward, because I think what markets are focused on is, other factors that could impact profitability over the next 6 to 12 months. And I think, like, I'd like to focus on the 2019 development. I remember during that time, um, you know, it was because after the BSP started cutting rates, um, I remember seeing consumer companies still not performing well immediately, because it seemed like the impact of lower rates, lower prices of rice. That was also the rice crisis. That was the first time that the rice tarification law was implemented to bring down the prices of rice. And the first few months after that, we still saw consumer companies delivering uh, disappointing earnings. So in other words, may what would you call that? Like, the rate cuts take time to work through the economy. There are lags. Okay. So yun. So this time around, domestically, I think what I'm a little bit worried about is that we have the BSP's latest consumer and business survey. So we have some slides here that show that. And unfortunately, because, inflation has been very high, consumer confidence is quite weak. So you can see here that consumers were asked about what they thought about this quarter and next quarter. And you can see that it's trending lower. Parang nawalan sila ng confidence. And, the things that consumers talk about, that's why they're not so confident, is, of course, the high prices of goods, no? Because of the high prices of rice, they don't have as much, and also food, and of course oil. Parang they feel like they don't have enough money to buy other things, because a big chunk of their salary is now devoted to paying for food and rice. And then because of that, they feel like, well, we don't have enough money, lower income. And then they're also talking about fewer jobs available, and they're not happy with the performance of the government. I mean, if they feel that way, then it's quite difficult to convince them that, oh, you better spend because things are gonna look good. No, they have to get used to the fact na mababa yung presyo ng rice and other things, that it will stay low. And if they're convinced after maybe several months of seeing that, if they go to the palengke, the price of food is low, then, they will allocate a little bit more of their money to spend on other things. So that is our worry in the next 6 months. So this could have a negative impact on profitability. And the same goes for business confidence. The BSP did a survey, and you can see also that the trend is still down, and businesses are concerned about weaker demand for goods and services. They were worried about inflation, and the impact on the demand for goods and services. Of course, like what came about in the survey, the ongoing international conflict, they are also worried about geopolitical tensions and potentially how it could impact oil prices. And maybe also because this survey was taken during the early part of the second quarter, no? Maybe mga April, May. So during that time, I think oil prices were trending higher pa.
Yes,
Ngayon
yes.
lang naman siya medyo nag-stabilize. Around May, June, we saw oil prices stabilizing. But before that, I remember consistent increases in crude oil prices. That's why people were kind of worried about it. So yun, I mean, that's just my worry. I mean, if you're a business owner and you have poor confidence, I don't think you'll pursue your capital expenditure plans, not just because the banks have cut interest rates. You're probably gonna wait until you feel that, oh, demand is increasing and it's probably here for good because interest rates are down, inflation is down. Then you will pursue your expansion plans.
I see. So, and just to be clear, the way this would translate to 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 become a risk for investors is that it may lead to weaker than expected earnings for the
Yes.
next few quarters, and it might cause the share price to react.
Yeah,
Is this
yeah. So that is the risk that I feel. In fact, if you look at economic growth, you're going to see that, for example, the GDP growth, no, was quite disappointing. For example, consumer spending growth was below 5%. Okay, sabihin niyo, but it's still positive. Yeah, it's true, it's still positive. But prior to the pandemic, where we were averaging 5 to 6% consumer spending growth. So a consumer spending growth below 5% is really very weak. And then business spending was also very weak in the first quarter. So it's really trickling down. Yun din, may lag effect. So people have become less confident. So that's the worry domestically.
okay? Now, moving on a little bit more to the U.S. market, it seems like, at least to me, that the consensus seems to be shifting more towards the US avoiding a recession or a hard landing that a few people have been talking about in the past. Do you share this view, or do you think this is still a risk going forward?
Yeah, I think a recession in the US is still a risk. I think the reason why people are thinking that it's not a risk is because in 2023, a recession in the US was, it was the most anticipated recession, di ba, nung 2023. But it was the recession that never happened. So, people are thinking, oh, especially with the Fed saying how robust the US economy is, people feel like, oh, maybe they're right. That's why they're not cutting interest rates because the US economy really is very strong. But there are a lot of indicators that would prove otherwise. And right now, it's more, I guess, more obvious. For example, the unemployment rate has been going up consistently. Even Powell talked about it. And by the way, the Fed for the first time in May started talking about the labor market. In the past, they never talked about that. They only talked about prices, prices, prices. And then all of a sudden in May, they started talking about their dual mandate, which includes labor. I mean, it's not surprising because you'd see the unemployment rate going up from a low of 3.4, it's now at 4.1%. So will the trend finally end just like that? I don't know. And then you have so the payroll numbers, which is what they usually announce, that's still very strong. But then you have the household surveys, which measures the number of people with jobs. That one is weak. So it seems to imply that a lot of people who have jobs right now are, having multiple jobs rather than, having yung mga ganun na, and then the jobless claims are picking up. So a lot of indicators that the American consumers are not as strong as they were in 2023. So the recession is still a possibility in our opinion.
So, do you think that it's the recession risk is currently being underappreciated by the market? Because if I look at, I'm looking at your slides at like in slide 28, if we could show it, you have there the PE band of the US and its valuation is at the high, right? At
Yeah.
21 times. So do you think people are no longer pricing in or accounting for the
Yeah.
risk of a recession?
I think many economists don't believe anymore that the US will suffer from a recession. That's quite clear in the price because yun na nga eh, the recession that they were anticipating to happen in 2023 did not happen, and it doesn't help that the Fed is you know talking it down, saying no, 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 the economy is really very strong. That's why we're keeping our interest rates very high. So, I mean, it's not surprising that because of that, a lot of people believe that the U.S. economy is very strong, and the the recession is not going to happen. The US will have a soft landing and not a hard landing. Kumbaga, in other words, parang Philippine economy lang yan. From a GDP growth of, say, before, I think we were averaging 6%, then we slowed down to 5%. So that's probably the thinking of most economists. In fact, I looked at the Bloomberg consensus estimate. According to the Bloomberg consensus estimate, the probability of a recession in the US is now only 30%, which is very low.
I see. Okay, so just to summarize so far the last few minutes, no, just to be clear, you're saying that, okay, rate cuts are theoretically good and it might cause some optimism in the short term, but you're saying that there's still risk in the next like 6 months or for the rest of the year, mainly because of a potential like slowdown in the local market and also a potential US recession. That is still a
Yeah.
risk even at this point.
Yeah, and Charles, I'd like to highlight lang, historically, when the US suffers from a recession, a bear market always follows. And yun na nga, rate
Bear market in
cuts
the US or bear market or
in the
both?
US.
In the US,
The
okay.
US suffers from a bear market every time it suffers from a recession. And, sige, let's not even talk about the recession. The fact that the US market is trading at 21 times PE, it makes them vulnerable to a correction
Correction.
by virtue of mean reversion. Di ba?
Okay.
Kasi if a stock is expensive, it always becomes vulnerable to a sell-off or a correction because investors just want to take profits because they feel that it's expensive, di ba? So we have that. And di ba kanina we talked about rate cuts and impact on the stock market. So I think, di ba, the usual mindset is lower interest rates are good for the economy. But I'd like to share that in the US, for example, maybe we can share the slide there on interest rates and recessions.
I think that's slide 29.
Yeah.
Ah, interest rates and sorry, sorry.
Yes,
That
this
one, that one.
one. So ironically, the shaded portion would show times of a recession. So if you look at the rate cuts, when the blue line goes down, those are times of rate cuts. You would think that that should be a time of economic recovery. The ironic thing is when interest rates are going down, the economy is strong. But then when interest rates are going down, the economy is suffering from a recession. Kasi ang usually nangyayari when the Fed starts raising rates, they over-tighten. Kaya yun na nga, by the time rates peak and they actually start cutting rates, it's because the economy is weak already. Parang because they have over-tightened and it's not good. So nagkakaroon ng recession.
Yeah, so you're, in other words, you're saying that sometimes rate cuts could imply or could signal that something is, parang not doing as well in the economy.
Yes, oo,
Actually,
oo.
that's actually one of the questions that we got in the advanced question from Paulo. No? So he's asking, is the looming Fed rate cut likely to be equities positive? In previous instances, rate cuts were the catalyst to a decline. No? So this is like kind of what you're saying, right? So if the rate cut is because of a weakness, then pwede pang the other side.
Yeah,
It
yeah.
could, yeah.
Yeah, the interesting part is there was a time when a rate cut did not lead to a recession. And that was in the 1990s. I mean, if you look at this chart, you can see that 1990s, mga 1995, 1996. And then, kaya nga sinasabi nila, it was Alan Greenspan who was the Fed chair then. And they call him the maestro because of that. He was successful in raising interest rates and tightening, but not, he was able to maneuver the rate cut perfectly such that he only controlled inflation but he avoided a recession kaya nga naging the maestro siya. But then one reason why or one particular or factor which they highlight na what did he do differently? Well, he looked at the market, he looked at the bond market, and he stopped raising rates before the interest rate the yield curve inverted. What do we mean by an inverted yield curve? Kasi 'di ba normally a longer term bond has to have a higher rate compared to a shorter term bond. But if your shorter term bond rate is higher than your longer term bond rate, then it's already inverted. And the yield curve has been inverted in the US since July of 2022. And usually if it inverts, historically, it 100% yung success rate in terms of
Predicting a
the
recession.
predicting a recession.
In the
Uh,
US. In the US to
in the
Yeah.
US.
Okay.
And it's now actually 24 months. So
Okay.
around that
Yeah.
time, in the past, meron ng mga talagang nagre-recession 24 months later.
Okay. So far you've identified two risks. No? So the risk short up in the local market, there could be weakness in the corporate earnings. In the global market, in the US market in particular, there could be a slowdown. Also, are these risks like confined to like the short term impact, or does it? Are you saying that the Philippine market won't be this would remain a headwind for the next 2 years, for the next, I mean, what is there a difference between like short term, the long term there?
Yeah, I think that's a very good question, no? Kasi, yun na nga, because of that, parang wala na ba tayong opportunity? I don't seem to think so. In fact, I think if the market is sold off, it is a great opportunity to enter the market. Parang this is the tail end of, what we've been waiting for because um, I think one of the frustrations we have as far as the Philippine market is concerned is that, our earnings have been growing actually the past few years. I would say even the past 10 years, and yet nobody has been paying attention to us. All the foreign investors are in the US because of, exciting tech issues. Right now, it's of course AI. But nobody really cares about emerging markets. It's not only the Philippines, it's all emerging markets. But right now, maybe if the US finally lags, and then the dollar weakens, and aside from that, we know that the public sector finances in the US is really bad because they had to they did a lot of pump priming during the COVID pandemic, and then last year, little known to many is that to avoid a recession, while the Fed was raising interest rates, the Biden administration spent a lot on stimulus to the point that they had a deficit spending of around 6% of GDP during a time when the economy was supposed to be very strong. So the debt level is really so high right now. If you read about it, there are a lot of talks of fiscal dominance in the US. So if you look at that, we have deficit spending, but our debt to GDP is 60% of GDP. So it's not alarming. So maybe, these foreign investors will finally turn their attention to emerging markets such as ourselves, which are trading at very cheap valuations, have better public finances, and of course, the potentially weaker US dollar on a longer term basis would be favorable for us. So that said, I'm still more bullish over the long term, but I think in the short term, maybe in the next 6 months, we could see some volatility.
I see. So I think that clarification is very important. No? So there could be some short-term volatility, but definitely long-term, it seems like nothing structurally wrong with the Philippines. Okay.
Yeah.
So I guess we have to move on in the interest of time because it's already 4:47. No? So I want to ask for your advice. No? So given your view, what will be your advice to our clients? And for this time, because usually you give like one advice for everybody, I'd like to separate them into different groups. Like the first one would be to traders. No? So what would your advice be to traders who can move very quickly, go in and out of the market? What's your advice?
Yeah, I think for traders, you should take advantage of this opportunity to trade the market because there is this window to take advantage of the market strength brought about by, expectations of how lower interest rates would lead to, better earnings, better economic growth. So yeah, we have this short trading window, probably until September, when the Fed starts cutting rates, or maybe until economic numbers come out and, economists are disappointed by what's happening. So yeah, we do have this short trading window. I think you should take advantage of that. So what's the next group?
Okay, for the next one, for those investors who are still building up their portfolio, no? So they're still investing depositing regularly, yeah.
Yeah,
So
so
what's the
that's
advice
your
for them?
peso cost averaging clients.
Yes.
Yeah, I think, you should continue investing peso cost averaging because, I mean, in general, if you look at the valuations of the stock market, they're really so cheap. And then, time is going to be your friend because eventually, the accumulating these stocks at very cheap prices will actually be beneficial over the long term when you go back to mean reversion, meaning stocks will re-rate back to historical average valuations, which is 16 times PE. We're currently doing 10 times PE. But, okay, that said, I will do a shameless plug, no, because for those clients who are not familiar or not aware, our subsidiary CMI recently launched the CSG fund. Okay. So kasi if you're a peso cost averaging client and you put in a few thousand pesos a month, it's hard for you to, 'di ba, to follow our advice or our strategy now. Now, what if April says, buy this stock, buy that stock? I mean, it's difficult if you only have a few thousands. And also, what about the current situation where we talk about being light or relatively, don't be aggressively invested in the stock market. So what can you do? You can buy this mutual fund that we launched, the CSG, which is an
Sorry.
actively
Yeah, it's COL Strategic Growth Fund, right?
yes,
Yeah. Okay.
CSG. Yeah.
Yeah. Sorry. Continue.
Sorry, shortcut ko na. So you can buy that because it's an actively managed fund, and our fund managers, during these times, they follow our strategy when the market is not very strong, or they feel like, right now it's not yet a perfect time, then they'll be the ones to tilt the portfolio. Like, for example, right now we're a little bit cautious. They will allocate a bigger portion of the mutual fund to mga cash or mga bonds. And then when they're more bullish about the market, let's say we feel like, oh, it's over and, bumaba na yung market. And then the foreign investors are starting to come in, and then we'll increase the allocation to stocks. So as a peso cost averaging client, the small investors who don't have time to monitor markets or don't have time to pick what stocks to buy, our fund managers will do it for you sa CSG. So So yun, shameless plug. I think that is an
Okay.
alternative you could do to do your peso cost averaging.
Yeah, so continue, those who are doing EIP, continue to do it because long term there's no problem. And if you want, you can invest in CSG to avoid the short term timings, di ba? Parang to avoid having to time it in the short term. Okay, very quickly for the next one, how about for investors who have already built up a sizable portfolio, who's invested na sila talaga? What's your advice to them?
Okay. Maybe you could take advantage of the rally right now to lighten a little bit.
Mm.
But then, if you lighten, don't forget to come back when the market is sold off. And I'm not saying sell everything,
Okay.
lighten lang konti, and then when the market is sold off, don't forget to come back and, to buy again.
Yeah.
Kasi yun na nga, it's only short-term volatility, I think.
Yeah, so we're saying also that it's unlikely for the market to run away. Run
Yes,
away
yes, oo.
upwards. Yeah. So takes a little bit of the profits, raise a little bit of the cash so you can buy back if there's another, issue next time that
Yeah,
there could be a recession or whatever, di ba?
yeah.
Okay. For the last group, how about investors who are still mostly on the sidelines? Those who feel like they're underinvested. What's your advice to them?
Okay. So, yon kung underinvested, well, I think you can wait until the market is sold off, but this might be your last opportunity to buy the market because yun na nga, one of the greatest threats is now gone, which is the high interest rate. I mean,
Okay.
if you think about it, I mean, the cycle, 'di ba? I mean, the bull bear cycle, where are we right now? We are at the tail end of a bear market, and that is evidenced by the cheap valuations of stocks, the lack of foreign investor participation, and the low value turnover. Yeah, of course, so far you're right by being out, but eventually what comes next is a recovery in a bull market. So you can't stay out forever. I mean, we won't ako personally, I don't think naman anybody can catch the absolute bottom eh. Pero, there are a lot of stocks right now that pay attractive cash dividends. So at least, when you're buying and maybe, you'll see some volatility along the way. Just make sure that that money is something that you don't need in the short term. And, earn some cash dividends, no? So it's good to actually start buying. I mean, by virtue of mean reversion, di ba? 10 times PE. So we want assuming that the valuation just goes back to say 15 times, 16 times, that's already a 50% increase in the price.
Yeah, I think we can quickly show that because I think that chart has always like amazed me every time I see it, and especially now. No? So can we show that PE band for the PSEI? Yeah,
Yeah,
so
so
you were
yeah,
saying
10 times PE.
way below the average, right?
So this is a two standard deviation already. So by virtue of statistics, I don't even remember, but the
Close to three na nga,
probability.
close to three standard deviations na nga. So that's like 99%, right?
Yeah, parang over the long term, medyo may 90+% probability that you will make money. Plus cash dividends while you wait. So what are you waiting for, di ba? But of course, ako yung ano ko lang dyan, yung caution ko lang dyan. Yun na nga, we don't know when the market will turn. So just make sure when you buy stocks today, to only use money that you are sure you can afford to keep for the long term that you won't need so that, hindi ka mapilitan na, what if hindi pa siya umakyat tapos bumaba yung market. We don't want to be the one selling at the bottom, di ba?
Yeah. Great, great. So it really seems like it's more of a portfolio allocation, portfolio management decision. No?
Yes,
So
oo.
because a while ago you mentioned for those who are heavily invested or who have a heavy, exposure in the market, lighten a bit, use this rally to lighten a bit, diba? Raise a little bit of cash. But on the other hand, if you're way underinvested, then you cannot expect to time the bottom and just buy
Mm-mm.
all there. You have
Yeah,
to keep some exposure. Yeah.
yeah, and also, I'd like to highlight how fast the market increased by 10% in a
Yeah,
span
in
of
4 weeks. Yeah,
3 weeks.
yeah.
So if
True.
you don't have anything, maiwanan ka talaga, di ba? So, and even in the US, let's say you're trading the US, yung Russell 2000, 'Di ba? I mean, it has gone up so fast. Surprisingly in only what? Maybe a week or two, no? The magnitude by which it has gone up. So it is quite difficult to time the market. So maybe having some exposure rather than zero when the market's already so cheap and you can earn some cash dividends, might be a good decision.
Okay, so a very good transition. So you mentioned already about dividend stocks. So could you share some of your favorite specific stock picks that you like?
Yeah, okay.
What?
So we have a list of stock picks. So I think every month naman we share that. They are calling the
Yeah.
shot stock picks. But I think Charmaine, can you
Yeah.
share that?
Slide 49 probably. Yeah.
Okay. So yeah, these are the stocks that I like. So since we're a little bit worried about, potentially weaker economic growth, we are more defensive. Meaning, when we say defensive, we're focused on, say, power, utilities, telcos. Um, so I'd like to talk about the banks and the properties and even the consumer. So that said, I mean, why are you recommending these issues, 'di ba? When you're saying na um stay defensive kasi baka pangit pa yung earnings eh, no? I just like to explain the reason why we are recommending some of these issues because um for the consumers, you will notice that our picks are consumer staples. Meaning, you still buy naman yung mga your coffee, your biscuits, your instant noodles, even if there's a recession. So the volatility in earnings is not gonna be as substantial as say, um, yung mga discretionary consumers, mga retailers na pag nagtitipid ka, you won't patronize them, you won't buy their products. And then for properties, the reason why we are also recommending them is because they're these property companies have heavy exposure to malls. And in the past, if you look at the performance of the malls, they never really go down even during a recession. Tuloy-tuloy lang sila. That's why we like them. And also look at their valuations. They're really quite cheap. I mean, historically, if you look at their valuations, for example, yung pinakamura dito, for example, would be Robinson's Land, no? Trading at only 6 times PE and even below the book value, meaning it's even cheaper for you to buy the stock than to buy the properties that they own, no? And it gives you a 3.6% cash dividend. Yung SM Prime, pag sabihin nyo, mahal naman yung SM Prime. But that said, I mean, SM Prime in the past traded at mga 30 times PE, no? So, a 19 times is not so bad. But anyway, and for the banks, my feeling is for the banks, well, we're sticking to the big three banks. May konting re-rating story din because their balance sheets are very strong. And they went through the pandemic and lo and behold, their NPL ratios did not really go up. So they did something right this time around, no? The banks are quite strong. And yes, maybe lower interest rates are gonna hurt their net interest margins, but they have some mitigating factors. First of all, their time deposit costs will also go down. And secondly, because it's been a while that, they've been anticipating lower interest rates, they bought a lot of longer term bonds that they will, enjoy some of the interest income from these longer term bonds. They can also trade those bonds and earn some trading gains from that. So okay din sila. And of course, for example, Metrobank is really very cheap. Can you imagine a dividend yield of 7.3% and stock trading below book value? So cheap. So yun. That's it. And also the REITs, we like A REIT and C REIT, no? So baka magtaka ka, what is the star for? So if you ask me, okay, if I were only to buy mga 5 stocks, what are my favorites? So yung mga naka-star, those are my favorites. So A-REIT, I like it for, of course, the dividend yield, and also for the planned asset injection, which would allow it to increase size, make it one of the biggest REITs in the Philippines, and potentially an index member. So the stock would re-rate because of that. C-REIT, of course, because it's a power REIT, which makes the dividends more defensive. Meralco is my preferred property company because it's a distribution company, so it should benefit from stronger power demand immediately. And then GT Capital, well, because first, valuations are super cheap, and then we're talking about lower interest rates, and when interest rates go down, GT Capital's Toyota Motors will benefit. Another trend that we're talking about right now is potentially a weaker dollar, stronger peso, and that is also beneficial for Toyota Motors. So those are the reasons why. And finally, PLDT, I like it because in general, I like the telco sector. The telco sector has a re-rating story right now because um, the competitive environment in the telco sector is improving. In other words, hindi na sila nagpapatayan ni Globe sa price. And in fact, right now, they're doing steps to increase the revenue per user. So what they're doing is they're removing the low value top-ups so that the prepaid clients are forced to top up at higher price points or para tumaas yung kanilang spending. So that would lead to higher profitability. And here you can see the dividend yield is also quite high. They will benefit from lower interest rates because of that. So yeah, and telcos have been well, a lot of investors are under-invested in the telcos during the past 2 years because they've had several issues before.
Yeah, in fact, no, that's quite interesting because in our survey, the telcos were actually received the lowest optimism score percentage of
Yeah,
people.
yeah.
So yeah, it kind of people have forgotten about the telcos, right? So there seems like there could be an opportunity.
Yeah, so because of that, underinvested mga tao, it is an opportunity. Tsaka yun nga, kasi, I mean, understandably, when you think about it in the past, if you look at the revenues of the telcos, you're very lucky if it even grows, no? Tapos, di ba, syempre, yung broadband, wala na rin. So, you'd get worried. But now, the mobile revenues are actually increasing a little faster. I mean, of course, it's not double digit, but at least it's now mid-single, mga ganon. So, at least better na. And it's not gonna go down or yung threat na bababa siya.
Okay, so what's interesting is that it seems to me that you've mentioned several themes or drivers, like for example you're looking for companies that are defensive just in case there is a recession. And so at least the least affected. You talked about companies that would benefit from lower interest rates, like banks with their trading gains, or let's say the properties, or Toyota, or for GT Capital. You also talked about those that benefit from the potential appreciation of the vessel. So there's some themes, right? And of course, some bottom-up stories like PLDT that you like. So clearly, there are opportunities in the market,
Yeah.
even if there are risks.
Yeah, and also Charles pala, I'd like to stress to our investors today to make sure only buy these when they are trading below or buy below price. Okay, it's not yet time to aggressively buy these stocks when they're trading at quite expensive valuation. So wait for them to correct if they are above it before buying.
I see. All right. Okay.